Right, let's dive straight into this explainer and unpack the 2026 financial results from Syrma SGS Technology Limited. If you follow the electronics manufacturing space, you know these guys have been incredibly busy, but today we're going to see exactly how they are building out this massive footprint. We've got our hands on the official financial statements, and let me tell you, the numbers tell quite a story. To make sense of such a dense statement, we're taking a growth engine approach today. We'll be covering 5 quick parts: the 2026 snapshot, surging revenues and profits, raising capital, strategic mergers and acquisitions, and finally, the shareholder bottom line. Okay, Section 1, the 2026 snapshot, establishing the financial baseline. So the absolutely crucial point right off the bat is this specific quote directly from the filing. The company is declaring that their statutory auditors have issued an audit report with an unmodified opinion. Now, if you spend any time reading financial statements, those 2 magic words, unmodified opinion, are exactly what you want to see. It basically means the auditors found the records to be a clean, fair, and totally transparent representation of the company's financial health. No hidden caveats, no red flags. It confirms that the foundation of the story we're looking at today is rock solid. Seeing that official independent auditor's letterhead from Walker Chandiok & Co. LLP really anchors our analysis. It proves we aren't just looking at internal, overly optimistic projections from a marketing team. We are looking at certified reality for the year ended March 31st, 2026. And with that trust established, we can get into the really fun stuff. Moving right along to Section 2, surging revenues and profits, the core operational engine. Just look at the sheer scale of the revenue jump here. We are seeing total income surge from a restated 36,630 million rupees in 2025 all the way up to over 44,079 million rupees in 2026. That is definitive, undeniable proof that their core operational growth engine is scaling up at a highly aggressive pace. Now, for the finance geeks among us, this granular breakdown brilliantly illustrates the bottom line impact of that revenue surge. Obviously, total expenses naturally went up to support that scale, hitting over 40,326 million rupees. But here's the kicker. The efficiency of their operations meant the profits actually outpaced the costs. Profit after tax leaped from a restated 1,686 million rupees to a staggering 2,933 million rupees in 2026. That is massive profitability growth year over year, proving they're keeping a really firm grip on their margins even as they expand. Let's take a quick second to translate a little accounting jargon you might spot in that breakdown. See that 32.47 million rupee exceptional item expense? That is simply a real-world practical adjustment. The government of India consolidated 29 existing labor legislations into 4 unified labor codes. Syrma SGS proactively took this 30 million rupee hit to ensure full compliance moving forward. So it's just a one-off administrative reality, definitely not a flaw in their underlying business model. But you might be wondering, how do you actually fund that kind of explosive growth? That brings us to Section 3, raising capital, fueling the engine. Let's track the money from their initial public offering. They walked away with 7,257 million rupees in net proceeds. And what's really fascinating is how strategically they sliced that pie. They poured the vast majority, over 3,598 million, directly into capital expenditure, literally building out their physical capabilities. Another 1,315 million went to working capital to grease the wheels of day-to-day operations, and about 1,900 million went to general corporate purposes. By March 2026, only a tiny, safe sliver of about 443 million remained unutilized, parked safely in fixed deposits. They basically put their investors' money to work immediately. And as if the IPO wasn't enough capital, they executed a massive 10 billion rupee raise, that's 10,000 million rupees, through a qualified institutional placement. Essentially, they sold large blocks of shares directly to major institutions. They issued over 14 million equity shares at a premium of 689 rupees per share. When institutional investors are willing to hand over 10 billion rupees at a premium like that, it is a huge vote of confidence in the company's trajectory. Which leads us perfectly into Section 4, strategic mergers and acquisitions, building the empire. Okay, the financial document uses some incredibly dense terms here, like pooling of interest method and Appendix C of INDOS 103. But let me break that down for you. This amalgamation simply means the National Company Law Tribunal allowed Syrma SGS to officially absorb 2 of its massive wholly owned subsidiaries, SGS Infosystems and SGS Tekniks, right into the main corporate bloodline.
And they did this retroactively to April 1, 2023. They essentially brought the whole family under one unified roof to streamline their entire corporate structure.
Now here is the ultimate narrative twist of this explainer. Because this merger was applied retroactively, they had to restate their past financial figures as if the companies had always been one entity. By restating their 2025 numbers to include these newly merged businesses, their historical revenue footprint instantly swelled, from the originally reported 22,777 million rupees to a whopping 36,157 million rupees. That's nearly a 14,000 million rupee jump in their baseline simply through corporate structuring. It's like a magic trick, but entirely legal and verified. And get this, look what happened to their past profits. The 2025 reported profit after tax was originally sitting around 797 million rupees. The restated profit after tax, 1,686 million rupees. The profit baseline effectively doubled overnight. It's a brilliant move that showed investors the sheer financial weight and operational muscle these internal mergers added directly to the parent company. But they aren't just merging internally, right? They are expanding the empire outward and doing it aggressively. During the 2026 year, they paid a bold 2,135 million rupees to snap up a 60% controlling stake in Elcom Integrated Systems Private Limited. And the agreement actually says they will acquire the remaining 40% in a phased manner. This is no longer just organic growth. This is buying market share and capability using that massive war chest they've built up. So let's bring it all home. Section 5, the shareholder bottom line and what it means for you. We've seen the surging revenue, the giant capital raises, and the strategic acquisitions. But how does all of that actually trickle down to per share value? Well, the payoff is crystal clear right here. Basic earnings per share rocketed from a restated 9.49 rupees in 2025 up to an impressive 15.64 rupees in 2026. For every single share held, the company is generating significantly more raw profit. And they're actually passing that operational success straight back to the investors. The board of directors has recommended a final dividend of 1.50 rupees per equity share, which is 15% of the face value, for the financial year ended March 31, 2026. It is a highly tangible reward to shareholders, and it signals immense management confidence in their ongoing cash flow and overall stability. Looking at this incredible financial engine firing on all cylinders, merging subsidiaries, locking down $10 billion in institutional funding, buying up competitors, and consistently returning value to shareholders, it leaves us with one vital question to ponder as you look at these markets. Is Syrma SGS writing the ultimate playbook for India's electronics manufacturing future? The numbers we've unpacked today certainly make a compelling case. Thanks for joining me on this explainer, and as always, keep your eyes on the data.